Hello, welcome to Edubbey Dynamic Solution Platform. Let us look at liquidity mining and yield farming. Liquidity mining and yield farming, unleashing the potential of crypto assets. 1. Introduction. Defining liquidity mining and yield farming. Liquidity mining and yield farming are innovative strategies in the decentralized finance (DeFi) space that aim to incentivize users to provide liquidity to decentralized exchanges and protocols by rewarding them with native tokens. 2. Liquidity mining. Liquidity provision. Liquidity mining involves participants providing liquidity to a decentralized exchange, DEX, or liquidity pool by depositing their assets into a smart contract. Token rewards. In return, participants receive rewards in the form of additional tokens, typically representing a share of the trading fees generated by the platform. 3. Yield farming. Maximizing returns. Yield farming takes liquidity mining a step further by allowing users to optimize their returns by moving their deposited assets between different DeFi protocols to capture the highest yield. Complex strategies. Yield farmers engage in complex strategies, often involving the simultaneous use of multiple protocols, to maximize their overall yield. 4. Core components. Liquidity pools. Both liquidity mining and yield farming rely on liquidity pools, where users deposit their assets to facilitate trading on decentralized exchanges. Automated market makers, AMMs. Many liquidity pools use AMMs, such as Uniswap or PancakeSwap, which automatically determine asset prices based on the pool's supply and demand. 5. Incentive mechanisms. Governance tokens. Protocols often distribute governance tokens to liquidity providers and yield farmers as rewards. These tokens can confer voting rights in the project's decision-making processes. Risk and reward. The potential for high yields attracts users, but it comes with risks such as impermanent loss and smart contract vulnerabilities. 6. Impermanent loss. Definition. Impermanent loss occurs when the value of the deposited assets changes relative to holding them in a wallet. It is a risk associated with providing liquidity. Mitigation strategies. Participants should carefully consider strategies to mitigate impermanent loss, such as choosing stablecoin pairs or using hedging mechanisms. 7. Risks and challenges. Smart contract risks. The DeFi space is susceptible to smart contract vulnerabilities and exploits. Participants should conduct thorough due diligence before engaging in liquidity mining or yield farming. Market risks. Cryptocurrency markets are highly volatile, and the value of rewards can fluctuate based on market conditions. 8. Evolving landscape. Innovation and iteration. The liquidity mining and yield farming landscape continually evolves, with new protocols and strategies emerging. Innovations include enhanced reward structures, yield aggregators, and cross-protocol farming. 9. Governance and community participation. Community-led decision-making. Many DeFi projects adopt decentralized governance models where token holders participate in decision-making processes. Liquidity providers often become integral members of the project's community. 10. Future trends. Integration with Layer 2 solutions. As the Ethereum network faces scalability challenges, the integration of liquidity mining and yield farming with Layer 2 scaling solutions is a trend to watch. Expansion to other chains. DeFi protocols are increasingly expanding to other blockchain networks, allowing liquidity mining and yield farming across different ecosystems. Conclusion. Liquidity mining and yield farming have become integral components of the decentralized finance landscape, offering users the opportunity to earn rewards by actively participating in liquidity provision. While these strategies provide attractive returns, participants should approach them with a solid understanding of the associated risks and continually adapt to the evolving DeFi ecosystem. As the space matures, innovations and improvements will likely shape the future of liquidity mining and yield farming.